My name is James Bridgeforth. I'm a young and very successful investor who has generated multiple tens of thousands of dollars investing in the stock and crypto markets. And in this video, I'm going to be talking about our CPI news data, what the markets are doing right now, and how we can position ourselves moving forward so that we can benefit. So at the moment, our consumer price index for November says that prices rose at 2.7% annual rate. This is lower than expected. And the consumer price index rose at a 2.7% annualized rate last month, a delayed report from the Bureau. So economists polled by Dow Jones expected the CPI to have risen 3.1%. This is huge because this is basically saying that our inflation came in lower than expected. And whenever our inflation comes in lower and it beats expectations, the market will react positively. And we can see this simply in the near term by just looking at how our markets and indices are actually reacting to this new data. So if we take a look and we go over to our stock market data, we could see a report from CNN that the Dow Jones is going to be up 0.14%. It looks like the S&P 500 index is up 0.80%, and then we have the Nasdaq index, which looks to be up around 1.5%. This is going to be huge news data that has just came out because if you aren't familiar, the Dow Jones basically tracks the performance of around 30 stocks. And then we have the S&P 500, which tracks the performance of the top 500 companies in the market. And then we have the NASDAQ, which tracks the performance of our top tech companies. And if we look at how each one is performing, then we can understand that the NASDAQ is performing the best. And the NASDAQ also tracks the top performing tech companies, which means that off this new data, tech seems to be benefiting the most. And why might this be? So when we have a CPI data that comes out lower than expected, that means moving forward on January 27th and 28th, we are going to have a Federal Reserve meeting, basically where the Fed, Jerome Powell, is going to be cutting rates. That's my prediction simply because we have come in under expected for our inflation data. Now I believe that they are going to cut rates in January, and the best performing companies on falling rates are going to be technology because it leaves room for them to have more cash flow, and then cash is also at a cheaper premium, allowing them to be more innovative. So this is a great move for all of our technology companies, and I think going forward, especially before January 27th and 28th, you're going to position yourselves running up until this date by investing in some of our favorite tech companies. This could be Palantir, Nvidia, Tesla. All of these companies are going to be great moving forward because on the run up to January 27th and 28th, this is going to be our load up period. We can either have one of two things. We can either have a buy the rumor or sell the news event, or our markets could just sell off completely off this news data. I don't believe that will happen, even though it could possibly be priced in, but I truly believe that moving forward, this is going to be a load up period heading into January 27th, the moment where the Fed is going to cut rates, and then on lower interest rates, the market also likes to perform well again. So this could be a double up opportunity for us because right now we see that the markets are reacting positively, and then also in January, I also believe that this will be a catalyst sending us up in the upward direction. So this is huge data that comes out because this is basically letting us know that this is going to get us out of that state that we were just in. We just came out of a government shutdown, a lot of uncertainty in the market where President Trump was issuing tariffs on China. Even though that got stalled for a year, it still issued a lot of uncertainty in the market, which is something that it doesn't like. Now, this news report that we just came out with consumer price index is basically going to allow us to understand what is the inflation like for everyday goods and services from all of our retail buyers out there. When we go to the grocery store, what do our prices look like? Now, I understand that this could be reacting positively for the markets, but all in all, this is still going to be inflation. So you want to look at it from this perspective. If you are not investing in the markets, then you are not going to benefit from this. This is only a positive catalyst for people that are actively investing. Because if you're not actively investing, the only thing that happens is that your prices are continuing to rise. So this is letting you know, based on the way that our monetary system is set up, and I've talked about this in previous videos, when we continue to print more and more money, it devalues the currency that we hold, which also leads to inflation. So because of the economy and the monetary system that we're in, we have to invest into assets or store of value assets that are going to outperform our inflation rate. Because I guarantee if you're not beating inflation, then you are getting poor because the purchasing power that you have is continuing to decline year over year. Everybody remembers when you would go to the store when you were younger and prices would be a lot cheaper than they are now. But now if you turn yourself into an investor and not a consumer, then you will also be able to benefit from this inflation that was just once killing you. So now you're in a position to where you're not fearful about inflation because you're investing into assets that will outperform it. So now you want to look at what is the best assets to invest in. And we can clearly see that the NASDAQ is benefiting the most from this rate cut, which is exactly why we're going to be positioning ourselves in that way. And I will be loading up from now until January simply by dollar cost averaging into some of my favorite stocks. This could be Nvidia, Palantir, Meta, whatever you name it. You simply want to look at, is this a positive company? Is this a strong company that I believe could grow in the future? And what is the current price sitting at? You want to buy at support levels, but obviously if you're looking for a strictly long-term position from 5 to 10 years from now, if it's truly a good company, the price will be at a higher price than it is today. So anything around this price could be a good buy for you. So with this positive news, I also want to take a look at the fear and greed index, because this is a major indication on what is the sentiment and what is the environment like around the market that we're trading in. So at the moment, if we look at CNN, we can see that the fear and greed index is sitting at around 45. This is going to be at neutral. A couple months ago, maybe a month and a half ago, we were just sitting at extreme fear. And even the last two videos that I made, we were sitting at fear. But right now we're sitting at a point to where we're right outside of the fear, and we're going to be in that neutral zone to where we're slowly recovering until we get to neutral, greed, and extreme greed. I wouldn't be surprised if we're going to be in the high 50s, maybe even a little bit into the greed by the time or after January 27th to 28th comes, because this is going to be a great time in the market to where we're slowly starting to recover. Another thing you want to look at are what are the months that stock market tends to perform the best in. If you look at the data, then you can see that the NASDAQ performs the best in December and January. These are 2 months that we are in, and another month that is coming up, to where I believe that the markets are going to close out strong simply because of this data. And I also believe that there's uncertainty that has been taken out of the market. And then as we head into January, which is historically a good month for tech companies, I believe that the other news data coming around the Fed cuts, this could be another major catalyst sending us in the upward direction. So this is a great way that you want to position yourselves. Remember that when you go on the charts, you want to look for support levels, or if you're looking to swing trade at certain positions, have a good buy zone, have a stop loss that you are going to set. If your price hits this point, then you are going to sell. You always want to go into everything with a plan, because if you don't, you will lose money. This is a game of emotions, and if you are able to regulate your emotions by going into it with a plan, then you will be successful. So just remember to do the knowledge and the research, to stay invested in the markets, and don't be a consumer but be an investor, because these are the people that are really going to benefit moving forward, especially with the monetary system that we're in. So if you enjoyed watching this video, feel free to like, comment, subscribe, turn on that post notification bell so you never miss an update, and I'll see you guys in the next video.